This is going to explain about the relationship between the central bank in a country and the government in that country, and about what kind of connection they have, if any. This varies by country. In the UK, we have the Bank of England, that's our central bank. In America, they have the Federal Reserve. For the Eurozone countries, they have the European Central Bank. In different countries, it will determine whether there is independence of the central bank or not from government. In some countries, like in the UK, it is completely independent from government. And in the UK, we have the Monetary Policy Committee, for example, within the Bank of England, which sets monetary policy in the UK. And they meet to decide what to do with the rate of interest, what to do with the supply of money. They decide whether to use quantitative easing, for example. These are all things that are done independently of government. In other economies, the central bank won't necessarily be independent of the government. However, they must always support government economic policy, even if whether they're independent of government or not. So that's how this can work in different countries, having the central bank. Then, if you have independence from the government, so for example, in the UK, where we have the Bank of England, which is completely independent of the government, this has certain advantages, but also disadvantages. And this is the kind of thing that you may have to write about in the exam. Some of the advantages is that you know that if you have an independent central bank, they will always be looking at the economic reasons for decisions, and they will be working in the best interests of the economy of the country. This will not be political. Whereas if the central bank is completely controlled by the government, then it's more likely that the decisions they make are political. Another advantage is that the electorate, the people living in the country, are likely to have more faith in the bank because that is all that they do and they are experts. They won't think that it's just politicians who are making decisions about what happens from a monetary policy committee point of view in the economy. They'll know that the people who are making these decisions about monetary policy are actually experts. The last one is that having an independent central bank will allow politicians to focus on other policy. They won't be using their time working out what happens with monetary policy. That will be done by experts within the central bank who are independent from government. However, there are a few disadvantages as well of having a central bank which is independent of government. If you have a central bank which is controlled by government, you can be sure that all policy, if controlled by government, will support government objectives. There can be no doubt, because the people who will be making the decisions are the politicians themselves, and they will know that whatever's decided from a monetary policy point of view will support what the government wants to be doing. Another thing which is a disadvantage about having independence from government is that there will be less control by the government over decisions, plus less coordination overall. The government aren't going to be able to control these decisions, which they may think is a bad thing. But the biggest one really is that there'll be less coordination between the central bank and the government. If they're independent from each other, the government can't have as much control over what's happening in the country. It's more complicated to organise, you could argue, because they aren't making one decision. There are decisions being made by each party. The third one here is that if you have a democracy and you have independence from government of the central bank, it will mean that the central bank is not chosen by the electorate, by the people voting in that country. If it's independent, then the democracy, the electorate, have no choice over who makes up the central bank, and you could say that that's bad for democracy. The last point here is that you could say that a disadvantage of independence from government is that politicians aren't making monetary policy choices. And they understand their country best. You could argue that it's the politicians who really understand what's happening in the country and how people are affected on a day-to-day basis, how firms are affected. They should be the people who are making the decisions to do with monetary policy. Just looking in general about what happens in the UK, we have this independence of the central bank, the Bank of England, from the government, and most developed countries have the same situation. So most developed countries have independent central banks. Generally, these are better at controlling inflation. And this is what data has shown over time, that if you have an independent central bank, you'll be able to control inflation much more effectively. And this can be argued to be one of the significant benefits of having an independent central bank. But you also need to question the flexibility of the central bank around inflation targeting. Are they willing to go away from their inflation target and actually look at the economy more widely? Or do they always stick to that, and that's actually to the detriment of the economy?